Vivek Gambhir, Managing Director of the company, joining us with a sense of what's happening behind the numbers. Vivek, good morning. Thanks for joining us. Apologize if we kept you waiting. I guess the first question is pertaining to the volume growth, 10% growth domestically. Are you saying that we are more or less back to where we were before all of these disruptions happened, where it was demonetization, GST? And is that true across channels, Vivek?
Good morning. The business has clearly shown a lot of resilience, and we are pleased with the robust, profitable growth that we have delivered. Clearly, our innovation-led approach, backed by relentless execution, seems to be working quite well. And we strongly believe that we are set up quite well to deliver an even stronger second half of the year. While we've been very pleased with our volume growth, in particular, soaps have done very well. There is a lot more opportunity to improve our performance in hair colors and insecticides. So in the second half of the year, we do believe that those two categories will fire more as well. So we should be able to sustain and improve our performance in the second half of the year going forward as well. In terms of the channel pickup, largely general trade and direct distribution and modern trade are back on track. Wholesale is about 80 to 85% there. There is still a little bit of a catch-up that wholesale, particularly in the eastern part of India, needs to do. But our hope is that by the end of this calendar year, so by December, all the channels should be back on track. And the good news is that so far, consumer offtakes have been quite steady. Urban has been picking up quite nicely. We are yet to see a meaningful pickup in rural. While our rural business grew marginally ahead of urban, the potential for growth in rural is much higher. What seems to be the constraint is lack of adequate wage growth in rural. But I think we are hopeful that on the back of a relatively okay monsoon, along with MSP increases and the government focus on rural infrastructure, the second half of the year should augur well for rural growth as well.
So what do you think, Vivek, would be a reasonable range to expect in terms of volume growth? I'll come to the product categories in a minute, but just to close off the loop on rural and urban demand, in each of those segments, what would be a reasonable number to expect in terms of volume growth?
As you know, if you look at our performance in the last quarter, we delivered a 10% volume growth. This was on the back of a 9% growth in the same quarter the previous year. So the volume growth, and along with the 10% volume growth, we've delivered a 24% EBITDA growth. Our guess is this would probably be the best performance in the FMCG industry for this quarter. Certainly the potential is for us to deliver better than this. Hard for us to take an exact call as what that number should be. But given the way I think offtakes are improving, and the way the channel is adjusting to a post-GST scenario, certainly our efforts will be to better this 10% volume growth in the second half of the year.
Vivek, good morning. Your best performance was in the soaps category. I believe you've benefited from the formalization prompted by both demonetization and GST to a large extent. Can you give us an idea of how much you've been able to improve your market share by, and what is the potential scope to continue improving that as these forces continue to play out in the economy?
The biggest reason for the growth in soaps was more at a category level, where the entire category has benefited from the price reductions that we have passed on to the consumers. So as the GST rates have gone down, we have taken price cuts of about 6 to 8%. That's really helped improve the performance on the soap category. Along with that, we have launched some very innovative marketing initiatives, expanded coverage in soaps to a few new states, and collectively all of this has helped us gain a certain amount of market share. But the soap numbers also need to be put into a context, which is the base quarter was quite poor, where our business had degrown by about 11%. And so a better way to look at the soap performance would be a 2-year CAGR, where the numbers have been a high single digit, because soap is a very penetrated category. Certainly our efforts will be to improve the performance going forward, but I expect soap growth to moderate in the next couple of quarters, and insecticides and hair color growth to pick up. And net, if you add these things together, we should be able to deliver a much stronger second half, but the portfolio mix could be slightly different.
And do you expect to announce new initiatives in both insecticides and hair color? Especially, I think in hair color, you had powder hair color that didn't perform very well for you. Can you take us through what some of those new initiatives would be and the costs attached to that, if we would see any commensurate impact on that side?
Clearly, I think powders has been an area of concern. Some of the slowdown in the powder segment was driven by a slower pickup in the wholesale side of things. Powders tends to be a fairly wholesale intensive and east dependent category, and that's where we face some challenges. So we have some tactical plans to try and get back some of the growth back in powders. Beyond that, the innovation agenda across insecticides and hair color is very exciting. I think for the last couple of quarters, we had been going a little bit slow just to see if the market environment improves. Now that we have enough confidence, we will dial up our innovation agenda. As far as marketing investments are concerned, we are quite comfortable with the range of ad spend. Our ad spend ranges between 11.5% to 12.5% of sales. Last quarter, it was 12.1%. If you compare our first half ad spends versus the previous first half in the previous year, it was 11.5%, went up to 12.1%. So we are very comfortable, and we will ensure that we adequately invest behind brand building. There is enough room in the P&L to be able to increase the ad spends and yet deliver better profitable growth.
Vivek, how are things shaping up on the input costs front? At a macro level, input costs starting to rise. What is it at your end, and are you confident that demand is strong enough for you to be able to pass it on as and when it happens?
For the next 3 or 4 months, I think we are quite comfortable with the kind of covers we have, particularly with regards to palm oil, which is one of the more volatile inputs that our soaps business relies on. Beyond that, we are remaining watchful as to what happens to crude, because crude is an indirect variable which impacts a fair amount of costs. So we will probably have to see in quarter 4. I think for quarter 3 we are okay. In quarter 4 we will have to see whether the input costs justify increasing prices. Also, the good thing is that by the quarter 4, a lot of our cost reduction projects typically start showing a lot more traction. So there is opportunities to further reduce costs, which will start showing up in the later part of the year. And then we'll try and take a call to see if we need to increase prices. But for the near term, the focus is on volume growth, tremendous opportunities there, and we'll keep on focused on that.
All right, Vivek, thanks so much. Appreciate you taking the time to speak with us. That's Vivek Gambhir of Godrej Consumer.